Do you want to make $1,000 a month on dividend stocks? I don't blame you. I mean, who doesn't? Imagine getting paid $1,000 a month in passive income, literally free money that you could use to go on a vacation, say to the Caribbean or on a cruise, or maybe for a down payment of a new home, or even a fancy new sports car. Look, whatever you can dream about, it's definitely possible. You just need a plan to get there. And that's why I've split this video up into two parts. The first part is a portfolio of quality stocks that investors like you and I can buy and get $1,000 a month in dividends from. And the second part is the plan to get there. So stick around to the end because you're not going to want to miss any part of it. So in case you don't already know, a dividend stock is a stock that pays cash, usually on a quarterly basis, every 3 months. If you look up a company and it says it has a 4% dividend yield, then it means that they pay 4% a year based on the current stock's price. So if you take a company like this one, 3M, whose stock price is $148 and they pay a 4% dividend, well, that's based on today's share price. But here's the thing. Before I go any further, I'm going to break it to you that in order to get to $1,000 a month in dividends or passive income, you're going to need about $250,000 invested. And I know it probably sounds like a lot, but I'm going to show you how you can do it. It is easy and just about anyone can do it. And you can do it even if you don't have a lot of money to invest. So stick around. Now you might be wondering, what do I know about dividends and making passive income? Well, I've been living off my stocks since 2014. Now, I trade tech stocks, I buy and sell dividend stocks, and also options. And doing so has allowed me to move to Europe, travel the world, and live the best life I possibly could. Now, since you're wanting to make $1,000 a month or more of passive income, I wanted to introduce Sure Dividend. Sure Dividend helps investors like you and I find high-quality income securities for their retirement and financial freedom portfolios. And the Sure Dividend newsletter, well, it analyzes their top 10 high-quality dividend growth stocks each and every month. Now, because they do such a great job at this, I want you to know that I use their service myself to research the companies for the videos that I create here. So if you'd like to support the channel, go ahead and check out the Sure Dividend link in the description below. And by the way, stay tuned because I'm going to be giving you a promo code worth $41 discount off their newsletter. Alright, so when it comes to dividend investing, you have to ask yourself, which dividend stocks do I choose? I mean, you want to pick stocks that have a safe dividend because if the dividend gets cut, then what, right? So here we go. This is a list of 9 stocks, and I picked them for a few reasons. Mainly because they're gigantic companies that have paid dividends for more than 50 years. In fact, many have paid dividends for more than 60 years. And for those of you who watched my videos before, yes, these are all dividend kings. These companies all make billions of dollars, and there's little doubt that they'll be around for many years to come. And when it comes to picking stocks, it's always best to pick quality stocks with the same characteristics. First on the list, we have Coca-Cola, the largest non-alcoholic beverage company in the world, and it's loved by millions of people. Even Warren Buffett's position in Coca-Cola is up over 1,800%. No wonder he loves the company so much. But as people drink less soda in markets like the United States, well, it's a problem. So Coca-Cola is investing in other areas like juice and tea. And Coca-Cola's higher growth categories are promising, as the company has increased its dividend each year as it's done for the past 59 years in a row. It's like getting a raise for 59 years. If you think that's cool, give me a like on this video. Next we have 3M, a company that manufactures a massive amount of products, over 60,000 products that gets used every single day in homes, hospitals, office buildings, and schools all over the world. Its business segments include safety and industrial, healthcare, transportation and electronics, and consumer products. And 3M has raised its dividends for more than 63 years in a row, making them a quality company for any investor's portfolio. Okay, so before I talk about the next company, I want to ask you a question. Do you drink water? I mean, who doesn't, right? So why not invest in it? Look, water is probably the most recession-resistant industry in the entire economy. I mean, water is a basic necessity of life. And this means a steady demand from year to year. So even in the worst economic recession, everyone would still need water. And this is where American States Water comes in. Now, you've probably never heard of this company, but they're a water utility and they also sell electricity in some states. And since our need for water isn't going away anytime soon, this is a perfect company for any dividend investor's portfolio. Not only that, they've increased their dividends for 66 years in a row, and they target a 7% annual dividend increase. Well, what does that mean? They expect the dividend to go up 7% a year. Well, for investors like you, getting a 7% raise every single year just for holding the stock, I think that's pretty amazing. Alright, so next we have Colgate-Palmolive, a consumer staples company that sells a bunch of famous brands, including Colgate, Palmolive, Tom's of Maine, Ajax, and Hills. The company has a unique advantage, and that's that many people in emerging markets use their products. For example, in 2020 alone, Colgate-Palmolive generated 44% of its revenues from emerging markets such as Latin America and Asia Pacific. And because of this, Colgate-Palmolive could be one of the best dividend stocks on this list. In the meantime, the company continues to reward shareholders like you and I with rock-solid dividends. They've paid uninterrupted dividends since, get this, 1895. And Colgate-Palmolive has also increased its dividend for 58 consecutive years. Next we have Cincinnati Financial, an insurance company that was founded in 1950. The company sells home and auto insurance, business insurance, and financial products, including life insurance, annuities, property and casualty insurance. As an insurance company, Cincinnati Financial makes money in two ways. First, it earns income from premiums on policies, and second, by investing the money that it doesn't currently need. Cincinnati Financial has raised its dividend for 61 consecutive years. And I've said it before, but imagine getting a raise for 61 years in a row. Next on the list we have Proctor Gamble, a consumer products giant. Their products include Pampers, Tide, Bounty, Charmin, Gillette, Crest, and so many more. And the company generates billions of dollars each and every year. As a result, Procter & Gamble is up over 73% in the last 5 years and has paid a dividend for over 131 years. And not only that, they've increased their dividend for the last 65 consecutive years. Incredible, huh? Give me a like on this video if you think so. I mean, this is incredible. Next we have Dover Corporation, a diversified global industrial manufacturer of engineered systems, fueling solutions, pumps and process solutions, imaging and identification, and refrigeration and food equipment. But what does that all mean? Well, I have to admit, I couldn't remember exactly what they made, but I quickly found out that some of their biggest segments include gas pumps and POS terminals, among many other things. And sometimes it's companies like this that keep the economy going. And it's amazing that nobody knows about them. Yet, this company continued to churn out billions of dollars in sales and raised its dividend for 66 years in a row. And these are the companies that are going to get you to $1,000 a month or more in dividends. Next, we have Johnson & Johnson, the largest healthcare company with a market cap over $450 billion US and over $80 billion in annual sales. Johnson & Johnson has a diversified business model across pharmaceuticals, medical devices, and consumer health products. And the company has 28 individual platforms or products that each generate over $1 billion in annual revenue. Imagine if you had 28 streams of income, each giving you $1 billion a year. Well, for that reason, Johnson & Johnson is up over 42% in the last 5 years, and they've increased their dividend for nearly 60 years in a row. Last but not least, we have Emerson Electric, a global leader in automation solutions and commercial and residential solutions. The company operates in more than 150 countries, and Emerson is also up over 62% in the past 5 years, and they've raised their dividend for more than 64 consecutive years. Do you see the trend here? Quality companies and dividend increases. This is what investors need to earn their first $1,000 a month or more in passive income. Alright, so now that you have an idea of what types of quality companies you'll need to start earning dividends, I know in the back of your mind you're probably wondering, how on earth am I going to get to $250,000 or more? Well, it's easier than you think, but it requires a 3-step plan. So it starts with thinking small. I bet you're thinking that $1,000 a month is going to be hard to do, but thanks to compounding, it doesn't need to be. You have to start by thinking small. Instead of obsessing over $1,000 a month, start with $1 a month, and then $100 a month, and then $250 a month, and so on. Remember that old infomercial that coined the term set it and forget it? Well, it's the same idea here. Next, we need to look at a drip plan. Have you ever heard the question, which would you rather have, $1 million now or a penny that doubles every day for a month? So many people would take the million, but a penny a day that doubles each and every day for 30 days is worth $5,368,709.12 on the 30th day. Well, with dividend investing, the same thing applies. After you buy your first dividend stock, the first thing you need to do is enroll in a DRIP. A DRIP is a dividend reinvestment plan that most companies, offer to investors, and it automatically reinvests the dividends into additional shares of stock rather than receiving the cash. So instead of getting cash, you get stocks and you don't pay a commission for it. Now, why would you want that? Well, you get something called dollar cost averaging. And what that means is that you're going to get more stocks when markets go down. And all things being equal, it means more money in your brokerage account each and every month. And then, when companies increase their dividends, like the companies I told you about earlier, well, you get more money each month and every quarter, and that means you automatically buy more shares. Imagine it's a snowy day, and you're at the top of a hill. Bear with me for a second. And today you decide you're going to roll a snowball, and as you're rolling it, it gets bigger and bigger as it rolls down the hill. And if you keep rolling that snowball, it just gets bigger and bigger. Well, when you own a stock and you get dividends that are automatically reinvested, you get more stocks every quarter, which means more dividends each quarter to reinvest, and so on. And when the dividends increase, you even get more shares, which means more dividend income that you get to reinvest. Get the idea? It's kind of like a never-ending cycle. Well, the cycle will end when you have enough passive income to start living on it and then decide to actually start living on it. The last thing you're going to need to do to get to that $1,000 a month or more in dividends is to keep adding to your nest egg. Most of us have somewhere around $50 to $300 a month extra to invest, and that's fine. What you want to do is start buying stocks as soon as you can and continue to do so. And before you know it, you'll be well on your way to your goal. And by the way, do you already own any of the stocks that I talked about today? Do you have any thoughts on them? Let me know in the comments below, because I love reading and responding to each and every one of you. In the meantime, thank you so much for watching this video, and I hope to see you again soon. Bye.